Hello, YouTube. Today, this video is sponsored by the color green because, as we know, there ain't no party like a bull party. And today, the bulls are rejoicing. They are celebrating on bad data. And what's really interesting is that there are a few different patterns which really give us a big clue into today, including the bigger the gap down, the more we want to buy it. If you remember, we were talking about this patient stay for quite some time. We got more than a 2% gap down, which is almost the same as what we got back to our February low, and we got a massive move from low to high. We were up by 5.5%. That is the single largest percent move going all the way back to our lockdown lows. Second thing, if you remember from the video yesterday, which is really interesting, this math stuff. So when we look here to, we carved out our bottom, we went up by about 6%, came down for about 7. Then we got that day where we had the gap down pump up, which was right here, this day right here, go to fill the gap. We pretty much got that. We got a combination of this day and our February gap down pump up. So if you remember, we went down here again, we carve out our bottom, up by about 6, down by about 7, then our dead cat bounce. We went up by about 6, down by about 7, and now we got our dead cat bounce, and we are actually closing over the downtrend. So the big question is, why did this happen? Where are we going from here? Because tomorrow is Friday. And as we all know, Friday close is the most important price for the week. Also really notable that we actually got that big tick in volume as well, almost as big as our capitulation low. So is this closer to the 2020 move off the bottom we got? Or is this just another bear market bounce for us to sell into and to fade it into the sunset next week? Where I want to start off today is by really looking at the heat map here. And I want to start here because when we look at the one-day performance, there is breadth, there is depth. It is almost green everywhere. What I want to look at instead is going to be the 4-hour chart. When we look to the 4-hour here, what does it tell you? Well, pretty much nothing happened for the second half of the day. Everything treaded water. So if most of the momentum or gains came in the morning, what caused it? And were there warning signs? Well, we already know we were in extreme fear, and yeah, we were actually down at about 15 in the morning. So when we got this CPI print come in pre-market, what was really interesting is just that we actually got a 100% beat as well on the CPI number, just like we got on PPI yesterday, and we got a massive move up. If bad data can't make us go down, what can good data do? Well, this is arguably bad data. There's nothing really positive about this. I just think that this was just classic bear market bounce and manipulation. So all these numbers were green. That is no reason for us to be going higher, but we did. So there's technical reasons for it. If you look here to what was the most important data point of the week, it was CPI and the FOMC. And this was interpreted as being a bullish reaction. Regardless of what the data was, it was obviously a bullish reaction. What'll be important going into tomorrow for follow through is what these banks tell us. The bank index is up more than 5% today. So I'll be paying attention to JP Morgan, Morgan Stanley, Citibank, Wells Fargo as they come in tomorrow. Really important. I want to point out something that I shared 31 minutes after the market opened. And this is where there can be part of the movement can be explained here. Here we're looking at the 21st of October monthly chain, 30 minutes into trading, and they traded 100,000 puts at 350. I believe, again, not that I know, but I believe they were closing these out. And we have to remember that 100,000 puts is the equivalent of 10 million shares. How many shares traded on SPY today? 146 million, which means that like 8% of the daily volume actually transacted on this chain in the first 30 minutes. And as they close out their puts, it forces the market maker to buy back the underlying to close out the position, which means they were probably out there buying up to 10 million shares on SPY in the morning. And the reason why this is so important is because I was looking for a move down to the green line. And if we now actually zoom into a short-term time frame to try to understand exactly when we knew the bears were wrong, and we were going to keep going higher. Let me actually step back for one moment here to frame the conversation a little bit. Talk about what I think is going to happen into tomorrow, because I talked about this in our private group for a large part of the day. So a 2% gap down, check. 2% gap down, check. And then we close right around the high of the day. That's what we got over here. Over here, we close within, our high is 367. We closed at 365. I would say that's like pretty close to the high of the day given the range. And then what we're looking at for follow through is going to be whether or not we get the follow through here, whether or not we get this actual next up move. So if we're going to repeat the pattern, we're looking for an additional move higher tomorrow. And then we're looking for higher lows to form. And then we're looking for ultimately for it to go down. That's again, this is if we're repeating this pattern. I'm not sure we are, but if we look at the short-term price action, what we normally don't do is look at short-term charts, but for today, I think it's really important. So when we look here to a 15-minute chart, which is probably the shortest I would recommend looking at, we note here that the opening candle is a doji. So we get a doji, which means indecision. Range gets established. And then the second candle, we form a higher low and a higher high. And then what happens? We go to our 50 monthly moving average or this green line. What happens? Well, if we throw in the VWAP, we'll get a little bit more context. So we push over, we digest the 50 monthly, we backtest, form a low, higher low, higher low. And then after that, we just power up, push off the VWAP, go right to our 200 weekly or the pink line. We advance to our downtrend or our channel, which is where we digest for a little bit. We digest it here, come back down and settle it. And then we just basically don't do anything. As we noted for the final 4 hours, the market really didn't do very much. So that is what happened today. And the fact that we're able to hold it here going into the close is pretty bullish because bears are caught offside. And that is how we actually broke the downtrend today. This is very classic price action in a bear market. The more violent the rip, it just means that we're probably coming off a very low base. And that's exactly what happened. So as people who are currently bearish are racing to cover because, yeah, well, even though it looks like we might still be repeating 2008, the price action doesn't lie. And when we start taking out key areas, we have to be very mindful of it. Almost the same thing happened on the Qs today, or QQQ. We open up almost precisely exactly on the low, and we got our tick in volume here. So green tick in volume, green price action, back over on a daily closing basis, back above our 50 monthly, but we are not above our 200 weekly, which means we're making really nice progress, but I'm not quite sure it's enough yet. And the reason I say that is because ask yourself this seriously. How did you feel in the morning as we saw the gap down versus how you feel at the close? If you're telling yourself at the close, oh my goodness, I am so happy we just cooled off because the next big rally is right around the corner. Well, guess where we probably are in the cycle? We're probably closer to this area than we are further down. If in the morning you were feeling anxious, like, oh my God, am I going to get a margin call today? This rip is taking longer than expected. We're probably somewhere between complacency and anxiety. You're generally not going to be bouncing around from, say, panic to complacency. It's usually between one level and another. And this is really what I noticed in our group today. Second thing I would notice that this is the up move we were looking for going into the close of this week or closing out mid-October. So now that we got that dramatic move up, are we set to repeat the next part where we go down? That's what's like really important. So since tomorrow is going to be the weekly close, let's look at a weekly chart. As a reminder, we will be on for a Friday stream tomorrow to walk you through the final hour. We're still in the downtrend. We still got a lower low and a lower high. We poked the 50 monthly. We poked the 200 weekly. But we're going to be closing above the 200 weekly for 2 consecutive closes if we can hold 359. And what's really important to me is just as we zoom into a short time frame here, I'm just going to remove all the lines for now and then just draw a box because this is what's really happening here. There's a liquidity grab in here. We have our low established in June, and that's really what we're doing here. The real bodies are really concentrated around roughly 360 to roughly 370. This is like a really tough zone. And I think that they're going to take full advantage of the liquidity. If we're going to continue an up move, since we are now closing near the high of the week after an inverted hammer and then a hammer, it just means this is like really choppy. For next week, if we can close and just get above 367 into Monday, technically we'll be poking over the downtrend, which we've not really done in quite some time. We've also not put in 2 back-to-back green weeks, going all the way back to that low we just looked at. So if we're going to be going higher, the clues are here. And if we look to the NASDAQ now, we got a Dragonfly Doji, which just means that we're right back to where we opened. And we're still set for 3 consecutive closes below here. We're still below negative 30. We're still below the June low. So I really want to see tech lead with continuation tomorrow. Otherwise, there's a lot more we could review, but I'm going to defer to our Friday stream so you can come back, tune in, see everything we have to watch. If not, I wish you all the best of luck into tomorrow. And as always, I really appreciate your support by smashing the thumbs up and dropping me a comment. Thanks so much. Look forward to seeing you tomorrow.